Welcome guys to the third part of the Learn and Get Rich series. Today I want to show you some examples of what your portfolio can look like. If you haven't watched the first part, feel free to do so. If not, your fault. If you want to skip right away, if you know what an index is, if you know what your budget is, what you can invest on a monthly basis, because that has been the topics from the first two episodes. The budget planning and what can I invest in, where I explain what kind of investment options are out there for those of you who never have dealt with the topic around investing. Now I'm going to give you some examples of what a portfolio can potentially look like. I'm going to give you telling you how risky these are. Generally speaking, obviously everything comes with a certain risk. Going out of bed in the morning comes with a risk, as it is to serve your time in the special forces. So I will explain you like the risk reward ratio of these portfolios I prepared for you. I will show you what money you could have made if you would have followed these portfolio over the past, let's say 10 years, 5 years, because we're looking here really at investing for everyone out there who's watching this. And so let's go straight away into it. The first portfolio I prepared for you is what I call Buffett's best bet. If you don't know who Warren Buffett is, well, feel free to Google it. Very famous, probably the most famous investor there is. By now, very old, but has constantly beat the market over decades. And his best bet really is if you have no idea about anything about markets, and I mean that probably applies for 85 to 90% of this population. If you don't have the time to watch the market every day, or if you are just here to make more money, and I guess most people are actually here to make more money, then your best bet is to just invest your money into an index. Now, you don't know what an index is, go back to the last video. I'm not going to explain it again. I want to give you an example now. What does it look like if you would have invested your money? I'm going to zoom in here a little bit into the S&P 500 over the past, let's say 10 years. So let's take here October from 2022, from 2012. So what would have, like, these are basically, by the way, calculators which you find online on Google. So let's say you started with zero, you invested monthly $100 every month for the past 10 years. How much money would you have made? We can calculate that. There is an error here. What's the error? That's great. Oh, fuck my face. Why is it not working now? Fuck this. Gonna zoom out here. Okay, so let's try the other one, the reinvested price calculator. I go here, October, starting year 2012 down to 2022, calculate. Okay, it doesn't work. It goes only with September, so fair enough. So let's do September over the last 10 years. How much money would you have made? You would have basically a total return of 155% of your initial investment, 9.8% per year. If you would have invested your dividends again, 207%. Now you can also adjust it for inflation because obviously these numbers are absolute. If you adjust it for inflation, your annual return is around 7%. So that's pretty good. Like, and again, the risk reward here is decent. To give you that in numbers, I really want to give you that actually in a number. I hope it works if I put here just in September. So put in September 2012 until 2022. I still want to have with a zero starting investment and calculate this. So basically, that means you have invested $12,000 over the last 10 years. Your value today is 19,731. Your annualized return 9.7%. And here are also taxes included. So you made a roughly 7% per year, including the inflation. Now, obviously, we had a major bull market over the past, since 2008, pretty much. And right now we are in a bear market, approaching the lows though. So I really would recommend starting right now. If you have not started yet, start right now. You will not regret this over the long term. Unless the planet goes to shit, then you regret it. But then you'll be dead like everyone else, and money will probably not matter anymore. Now we can play around really with these numbers easily, like what would have happened if I would have started, let's say, only in 2020. I can calculate that. You can see here is a negative return adjusted for inflation, obviously because inflation is massive right now for pretty much everyone. If we take that out, you would have actually 4%. You add inflation minus 1.7%. So you can really see here as well what inflation does to any of your gains. But what it also does if you invested nowhere and make zero money, because you're losing basically 2 to 10% right now. In the Czech Republic, 17% over last year. And that's just fucking reality. So here it's important, like you really want to look here at the long-term vision. You can take almost any time frame. Let's imagine, like really, this is again, I wanted to say this is only for the S&P 500. This is low risk reward, meaning like it's low reward, low risk as well, because you're just betting on a rising economy, basically. Let's say you were born in 1995. Until today, if your parents would have saved $100 for you since you were born, every month, and they will give it to you when you reach your 18th birthday, that's 2013 January, you would have had around 4% per year as well. So that's pretty nice for just $100 per year. You made over double the money over, well, 18 years in this case. Obviously, between 1995 and 2013, we had the dot-com bubble in 2002 and 2008, so that cannot be underestimated. And the bull market really massive since 2008 until 2022. So I really want to put that into numbers now for you as well. If you would have started investing 13 years ago, how much you would have made? You would have tripled your money in an index, only in an index adjusted for inflation. That's 11% per year. And that will come again, probably. Maybe not as massive as that. Maybe, yes, no one knows. But it was massive and it will be massive again. So start right now. Um, Now, this is one option. I just show you some other options you can do. We have here the no-brainer for beginners. If you don't want to invest only in an index and want to rather put some money as well in your favorite ETF, feel free to do so. The numbers are quite equally here. It just really depends on what you prefer. If you prefer to rather invest into a specific industry or I don't know, small businesses, mid-size, you'll make your choice. If you rather want to do some stocks as well, you can do 50% in an index, 25 of an ETF, 25 in choosing stocks. Just to give you an example, you want to buy Amazon or Tesla every month, just do that. So, right? Instead of putting $100 into the index, you put 50 into the index, 25 the ETF, and 25 into the chosen stock you like, or more chosen stocks. Like really, the percentage how you divide your capital is not really relevant here. Relevant is that you do something consistently every month for the next years, and that's all that matters really. Most trading platforms by now offer you even the option that you tell them, I want to buy for $100 every month this stock at this day, and you're good to go. All you need to make sure is you have the money there, and they will actually do it for you. So it is actually a no-brainer. Now, these are all stocks, ETFs. I've showed you where you can do that. If you still have any questions to that, obviously, you can reach out to me privately if you have my number. If not, fuck it. Now, you want to invest, you can also invest into Bitcoin, of course, Ethereum, the two major cryptocurrencies there are. If you say you be conservative about it, but you still don't want to like have a small amount invested into this, I have some friends who are doing that. They hate crypto, or hate. They say it's basically useless, and I mean, time will show, right? Like maybe it goes to zero, really. Like you don't know, but by now I don't think so anymore. But still can happen. So if you want to make sure you have a small position in Bitcoin, feel free to add 10%. So this is just another example. If you really love Bitcoin, like most millennials by now, you can put 50% into crypto, 30 into an index, 20 into stocks. You can see here you can play really around with whatever you prefer based on your trading type and based on your risk reward. You can see that the risk gets a lot bigger here, and I can guarantee you it will get bigger with crypto. But if you can stay calm within uncertain times and as well throughout bear markets, you'll be fine. If you want everything, you can invest crypto, silver, gold, indexes, stocks. So you really choose how much you want to do. Here I have one portfolio for full degenerates. That basically means you put almost everything in crypto with 80%. You buy 10% of your favorite stock, which can be really Mariana shares if you want to. And also the very famous stonks, which is probably quite equal to penny stocks from Wolf of Wall Street. You're basically buying crap, hoping it will massively grow. The risk here, massive. The reward, massive. Mostly you will all lose all your money. So I wouldn't recommend it, but you can do so. And definitely by today, you have a lot of people doing that. Just check out Wall Street Bets on Reddit. What I'm personally looking at currently is probably something like that. So I will be crypto and divide into indexes, stocks, and gold and silver. And that's about it, what I want to show you in matters of what kind of portfolios you can build. So I'm going to zoom out here to stop the video wherever you have to in order to have another look at the distributions I suggested, so you can really do whatever you want with that. Make sure you just be consistent about your monthly investment. About the splits for crypto, I gave you here some examples what you can do. This is more conservative within crypto to stay with BNB, Bitcoin, and Ethereum, which are my top three for the next bull market, really. That will be the majority of any position if I hold any, if I do any crypto, who knows. And the third is an FTT, which is the coin of FTX, the trading platform. So these are all level one blockchain coins. But if you love shitcoins, you can also invest your money in shitcoins. Just really, you do as you want. You will see the result can be rewarding, but so can be the money you lose. It can go very fast down to zero. I can assure you of that. So if you really are new to this, stick to the first portfolio. Don't just do the index and you're gonna be fine. If you feel like you wanna also take some Bitcoin with you, do that. So as someone who has no experience, I can definitely, or I would recommend something like 70% index, 30 Bitcoin if you like it. If you don't like it, just do the indexes and you'll be fine over time. Or at least you hopefully fight inflation, meaning you don't lose money over time, which is what happens right now with the massive inflation. Basically, that your purchasing power goes down massively. What you could have bought with $100 10 years ago is not what you can buy today with $100 anymore. I'm very sure you are very aware of that also within the last weeks and months showing you that. And then I just want to show you some more stuff, how much money you would have made if you would have invested into certain assets. So if we just go into gold, for instance, how much money could have gold made you if you would have invested over, let's say, 10 years again. So we go from October until today. How much would have gold made you? 9.8% in total, actually. That's a total. Gold is obviously a very passive, conservative asset. If you adjust that for inflation, you end up at minus 15% in total. So why would anyone want to buy gold? It's just stable. I mean, if you want to do gold, I think it's not a bad investment either right now, especially because we're having a down. It's very stable in crisis, and if the world goes down, you can pay with gold. That's basically the whole idea behind it. No one will take your Bitcoin anymore, maybe even your cash. Like if you're in Venezuela, no one wants your cash. You'd rather burn it before you buy wood with it because it's cheaper. So again, like gold wasn't performing greatly over the last 10 years, adjusted for inflation, it performed actually miserable. But I still see it as a valued part of any portfolio, really. For me, it's definitely part of my where I have an eye on and where I looking to invest. Preferably physical coins, by the way, which you can just ask in your bank. You can buy them there. Just make sure you check the gold price before it usually comes per. You can check it per ounce, per gram, per kilo bar. At the moment, we're looking at something like $1,640 for an ounce, which is around 31 point something grams. Um, just make sure you're not paying a huge add up on that. But definitely, I think it's pretty cool to have something gold, like fine gold, actual gold. And it's just good for diversification. Now, silver, I like silver as well. I think the price is at the moment at a good price. If we would have bought that, if we would have started buying that 10 years ago, what would we have? A total silver return of minus 41%. That is really, really bad. Now, what does this tell me? Most people don't want to trade this, but this is exactly what I am looking at. I don't want to, like, I look more at things which are down over the last 10 years where I think, obviously, I'm thinking that this will perform in the next years. Otherwise, I'm not buying it because it's cheap. I'm buying it because I think it will do well in the next years, and that's it. Has it done so in the last 10 years? Absolutely not. It has an annualized return of minus 5% per year. Now you take inflation into that. You lost 7.5% over the last 10 years every year. Now that's very bad. Um, but again, it's the same premise as for gold. I really think it can and will do well over the next years. And could be part of your portfolio, could be not. It's really up to you. And you can also buy coins here, by the way. And very last but not least, I want to show you some Bitcoin now. Obviously, everyone knows Bitcoin has been. If you would have started even 10 years ago, you'd be massively rich by today. The total return on investment is around 4,000% over the last 9 years. So that is all known by now that you could have bought Bitcoin 10 years ago for about $1. Right now, worth $20,000 at the peak, 69,400. And some people say it will go to 500,000 when people say millions. Whatever the price will be, if you believe in it, it has um, performed better than anything else, anything people can basically think of. And just for example, right now Bitcoin is around 75% of its highest price, all-time high. The same happened to Amazon back in the dot-com bubble, for example. I think Amazon lost around 90% only to increase the price of it over the time of back to like I don't even know, a lot more. Let's have a look at it actually, since we're already here and talking about it. Amazon currently worth $100, which is also, I like the price of $100. I have to say, the all-time high was 107, 166, something like that. Now, how much was that 10 years ago? If you would have bought it in 2003, it was worth 64 cents. So you would have made a amazing amount of boom 24,725%. Now these are obviously extremes, but the whole point of what I'm making here is if you start early and do it continuously, you will be rewarded. It will be good, and if you don't know what you're doing, just bet on the indexes, on certain shares. I really don't want to pick your favorite. That's up to you. But do something about your money. You will thank yourself, your future you, or your kids, or your grandkids, or whoever. It will thank you. You need money to survive. Money definitely is not the most important thing in life. But if you don't have it, that is a problem that will really can play with your mind badly. And I speak here out of experience too. So I hope you're gonna find this stuff useful. It's 20 minutes talking a lot. If you have any questions, friends, just reach out to me, guys. And other than that, I wish you a great time. Good luck. I will also make videos of the performing assets in my monthly updates. So imagine we would have started October when I started doing the YouTube videos. I'm gonna track the performance of some portfolios. I created there 3 portfolios in total, and we'll see how the assets would have performed over time if you would have started with me. So all the best, guys, and love you, Matt. Cheerio.